Hi everyone! Welcome back. If you're new here, my name is Ador. I'm an overseas Filipino worker, a qualified accountant, and I work in finance in London. So today we'll continue our series of comparing which investment option is better for you so you can make better decisions as an investor. In this video, we'll compare MP2 and UITFs or Unit Investment Trust Funds. Let's start with MP2. This is the conservative choice. It's backed by Pag-IBIG with funds going into housing loans and government projects. It's principal protected and it's quite simple to open. Now, UITFs. Ano ba ang Unit Investment Trust Funds? UITFs are remarkably similar to mutual funds where they pull money from investors like you and me, and they're both managed by professional fund managers. Or the main difference is that UITFs are regulated by BSP, Bangko Sentral ng Pilipinas, whereas mutual funds are regulated by Securities Exchange Commission. The other difference, UITFs are available in major banks like BPI, BDO, or East West Bank. So it's very accessible to investors, while mutual funds are offered by brokers and investment firms like Sun Life or Manulife. This time, we will compare Pag-IBIG MP2 with a BPI Feeder Fund or UITF. We look at 5, 10, and 15 years return, pros and cons of each, and a reflection at the end that may surprise you. So let's break it down. First, accessibility. UITFs or Unit Investment Trust Funds, usually they require 1,000 to 10,000 pesos na minimum investment. Kung may Philippine bank account ka with online banking, pwede kang mag-invest sa UITF kahit nasa UK, Dubai, or Hong Kong ka pa. For MP2, 500 pesos lang ang minimum investment. And you can open an account online, you can top up anytime with some remittance partners or payroll deduction if you are working in the Philippines. Next one, who manages the investments? For UITF, these are managed by a trust fund or fund managers in the bank. But for MP2, it's managed by Pag-IBIG mismo. What about the fees? UITF may management fee na 1 to 2%, while MP2, it's zero, walang management fee. Now, let's talk about the risk level. UITFs are medium to high risk depending kung bond fund or equity fund. On the contrary, MP2 is very low risk because it's government backed. Your principal is guaranteed by the government. And in terms of liquidity, UITFs, pwede mong ibenta ang UITF investment mo anytime. The settlement may take a few days. While MP2, your money is locked for 5 years, so it's not very liquid. Now, let's also look at the taxes. With UITFs, you pay 20% final withholding tax. But this is already deducted from your returns. But with MP2, your dividends are 100% tax-free. Now, let's talk about the most important thing, the returns. For the UITFs, BPI US Equity Feeder Fund Peso Class, for example, it had about 14% net return year-on-year since it was launched in 2019. Compare that to MP2, historically 6 to 7%, which is very stable pero hindi kasing taas. If you invest 10,000 pesos, for example, in MP2, you choose compounding and reinvested every after 5-year term, here's what happened. After 5 years, your total contribution is 600,000 with 7% interest that becomes 720,000. After 10 years, total contribution is 1.2 million, but your money is now 1.74 million. Now, after 15 years, that's the end of the third cycle. Your total contribution is 1.8 million, but your money is now 3.2 million. So, by year 15, your gain is 1.4 million in the form of dividends. MP2 is principal protected and it's remarkably simple. So, no need to track the markets, and it's best for conservative savers who want peace of mind. However, please note that MP2 dividends are not guaranteed as well. The 6 to 7% may change and it's declared annually. The other disadvantage is that you may have a lower long-term growth compared to global investments, and your money is tied to Pag-IBIG Fund for 5 years, but no global exposure. Now, let's compare it with the BPI US Equity Feeder Fund Peso Class. This UITF was launched in November 2019, which allows investors in the Philippines to invest in the US market. This feeder fund or UITF tracks the S&P 500 index, representing the America's top 500 companies. Think of Apple, Microsoft, Amazon, Tesla, Nvidia, Google, Coca-Cola, and more. I picked these UITFs for a more realistic comparison, as you can buy and sell your investment in pesos, which is better for most Philippine investors or OFWs who already have peso savings in the Philippine banks. And this means there's no forex account needed, or you don't have to open a USD account or pay conversion fees or wire fees. But of course, if you have a USD account, you can invest in the feeder fund USD class as well, but that's for another video. With this UITF, the Peso Class, you just need 1,000 pesos minimum to invest, unlike the USD feeder fund where you need at least $500 to invest. There are no early redemption fees, which means you can sell your investment anytime without fees. And with this UITF, you still have USD exposure, although the underlying assets are in USD because, of course, you're investing in US companies, diba? So you are buying the asset class in USD, but you're paying in Philippine pesos. So your returns already embed USD and Philippine peso movements, so you can capture both S&P 500 performance and peso depreciation, or lose if Philippine peso is stronger. So kung malakas ang USD, you gain. If peso is stronger than the dollar, you lose. Pero lahat ng FX differences is already included in the returns of 14% per year. So again, here's the key facts of BPI Feeder Fund UITF Peso Class. It's peso dominated, so no forex worries. The trust fee is 1.5% annually. In terms of performance, since inception, the return has averaged around 14% annualized, but that's net of fees and withholding taxes of 20%. So if you think about it, that's double than what you get from MP2. In fact, yung UITF na to na BPI Feeder Fund Peso Class, per unit, it was valued at 100 in 2019 and it has risen to 230 mark in 2025. This means when you invested 10,000 in 2019, your money is now 22,300. That's 230% increase. Let's break it down further. So with 10,000 amount invested, your net asset value per unit, net of fees, after 5 years, your money becomes 844,000. After 10 years, that's 2.5 million. And after 15 years, your investment would have grown from 1.8 million, that's your total investment, to 5.6 million. So at year 15, that's 3.82 million gains compared to 1.4 million with MP2. That's over 2.4 million difference. Again, the advantage of this UITF BPI Feeder Fund is that you have exposure to global giant companies in the US. The US market continues to dominate the global stock market, and I believe they will continue to do so in this lifetime. With this BPI Feeder Fund Peso Class, your investment is peso dominated, so no need to worry about USD conversion. And as you can see, long term, you have higher growth potential. 14% for the past 6 years annualized, so your money works harder for you. But here's the but. The stock market is very volatile. In the short term, you will see up and downs in your investment, so if you're choosing UITFs, you need to invest for the long term para ma-maximize mo ang returns. MP2 has been doing incredibly good in the past years, but your dividends are not guaranteed too. The only guarantee backed by the government is your principal. And lastly, with UITFs, there are fees to pay. Remember, about 1.5% trust fee, and it requires discipline to hold through downturns in the market. But if you are a long-term investor, this wouldn't matter. Again, let's put MP2 and UITF side by side. At 5 years, they're close. 711,000 versus 844,000. At 10 years, the gap widens. 1.7 million in MP2 versus 2.5 million in UITF. At 15 years, the difference is striking. 3.2 million versus 5.6 million. So, what does this mean in real life? With MP2, you're choosing peace of mind and predictable growth. You'll never see your money drop. But with the Feeder Fund, or UITF, you're choosing higher growth, but you must stomach volatility. In 2020, the S&P 500 dropped more than 30% in a few weeks. If you panic and sold, you lost. But if you held, you doubled your money by 2023. The difference isn't just numbers, it's about your behavior. Can you handle seeing your money drop from 1 million to 700,000 temporarily? Or do you prefer steady dividends without that stress? So, which is better? MP2 or BPI S&P 500 Feeder Fund? The truth is, there's no universal answer. That's why I did this modeling to give you the numbers side by side. You don't even have to choose between the two. Perhaps you can split your portfolio. You can have both powerful options, 500,000 invested in MP2 and 500,000 invested in UITFs, for example. In the end, the best investment for me is the one that you'll actually stick with for 10 to 15 years without regrets. Because investing is about making money and living your life on your own terms. It's about you, your personality, your goals, your peace of mind, and most importantly, it's about finding joy in investing. So, tell me in the comments, would you choose MP2 or try investing in UITF? See you in the next video.